Hey, it's halfway through 2025, I can't believe it. So I thought this would be a real good time to give you a mid-year Silicon Valley real estate market update. You know, 2025 has so far been a lot different than 2024. At least it certainly feels a lot different than 2024. So whether you are thinking about buying a house in Silicon Valley or selling a condo in Silicon Valley, or you're just curious about what the hell is going on with the Silicon Valley real estate market, you're definitely going to want to stay tuned for this video. So there's a lot of news stories out there talking about how the real estate market is in retreat. I think if you pick up any newspaper, not that anybody picks up newspapers anymore, but if you were to click on a headline somewhere, I think there's lots of articles out there talking about how real estate is softening throughout much of the country and throughout many parts of the Bay Area as well, but certainly not all of the Bay Area. In fact, a lot of Silicon Valley continues to do very, very well. The other day, I clicked on a headline on Bloomberg.com, and it described how the Silicon Valley real estate market is red hot. It said that $4 million fixer-uppers are just flying off the shelves. And that is interesting because that is contrary to the experience of many sellers in Silicon Valley today, who are seeing their homes sit on the market for days and weeks and even months before their homes are sold, if in fact they sell at all. We are seeing a lot of homes get pulled off the market because they did not get the kind of offers or any offers that they were hoping to get when they put their homes on the market in the spring. So what's going on? What is it? Is the market cold or is the market hot, like Bloomberg seems to think it is? Well, actually, it's a tale of two markets. So, you know, what they tell you is that all real estate is local, and that is, you know, I don't want to say it's completely true because there are always national trends and perhaps even international trends that may impact your selling experience with your house, wherever it may be. But certainly we are seeing that in Silicon Valley today, certain areas and certain neighborhoods are continuing to be very, very hot, and homes are in fact selling at way over asking price in many cases. We are seeing homes still this past spring selling for $1 million over list price. That's very, very common. But then we are seeing other homes which are sitting on the market, again, like I said, for weeks and in many cases months. Now, the average days on market in Silicon Valley in May of 2025 was 17 days on market in Santa Clara County, 17 days on market for single family homes. And I like to look at Santa Clara County because I consider Santa Clara County to be the bellwether county for Silicon Valley and actually for the Bay Area in general, and actually the greater Bay Area, because I think that what happens in Santa Clara County is sort of foreshadows what's going to happen in other parts of the greater Bay Area. So again, average days on market in May for Santa Clara County, 17 days. And you know, that sounds like maybe kind of a lot because I think that a couple of years ago we might have been talking about, you know, 6 to 9 days on market. So we're maybe double where we were a couple of years ago. But we're actually only up slightly from last year. Last May in 2024, single-family homes were taking an average of 15 days to sell, so not that much longer. But you know, when we're hearing about these $4 million fixer-uppers that are just flying off the shelf, where is that happening exactly? That's happening in the you know, the beautiful people neighborhoods, right? So we're talking about Atherton, we're talking about Menlo Park, Palo Alto, Los Altos Hills, Cupertino, Mountain View. You know which neighborhoods I'm talking about. In these neighborhoods, the market continues to be very strong, but not for all properties, because not every property sells in 17 days on average. Actually, in many of these neighborhoods, homes are selling in 8 or 10 days, but some homes are sitting on the market quite a bit longer than that, even in these really highly sought after neighborhoods. So what is it? Why is it that in these high priced neighborhoods, even fixer-uppers are flying off the shelf for $4 million, when in plenty of other, ordinary, normal neighborhoods, I don't know, like maybe Cambrian in San Jose or Campbell or, parts of Santa Clara, homes are not really selling that fast? And there is only one explanation for it, and it's not mortgage rates. Everyone seems to think that what's ailing today's real estate market is mortgage rates, that mortgage rates are just too darn high, and that buyers are waiting for mortgage rates to come down. Well, buyers may be waiting for mortgage rates to come down, but I'm here to tell you that mortgage rates probably are not going to come down anytime soon. They've been where they are now presently for going on 2 years. There's been predictions that mortgage rates are going to go down, but yet they don't seem to be going down really. And that's because mortgage rates typically go up very quickly, but then they go down very slowly. So right now mortgage rates are about the highest they've been in more or less 20 years. But in terms of the post-World War II average, mortgage rates are only maybe a quarter point or maybe at most a half a point higher than the post-World War II average. So yeah, they are high in one sense, but they're not that high in another sense. And I don't think that it really matters what the mortgage rates are. That's not what is holding buyers back. What's holding buyers back is this simple issue of affordability. Affordability has really plunged in most parts of the Bay Area. There are only so many people who can afford to buy the median single-family home in Santa Clara County, which, by the way, the median single-family home price in Santa Clara County in May of 2025 hit an all-time high of $2.166 million, and there just aren't that many people who can afford to pay $2.166 million with mortgage rates where they are. But people could certainly pay maybe $1.7 million with mortgage rates at 7% or 8%, because what's really holding buyers back is affordability, not the rate. The rate doesn't really matter. Rate could be 20%. If prices were down for $900,000, you'd be having people line up around the block to buy your house, even with 20% mortgage rates. What's happening, simply put, is that there is an imbalance of supply and demand in different segments of the market. So there is still not much supply in the upper end of the market, in Cupertino, in Los Altos Hills, in Mountain View, in Atherton. These neighborhoods, there just is not very much for sale, but yet there are plenty of people who are sitting on just oceans of equity from their stock portfolios, and they are able to make these aggressive bids even on these $4 million fixer-uppers, because it all comes down to one simple thing. It's not mortgage rates, it is the balance of supply and demand. The balance of supply and demand is what always dictates real estate prices, not mortgage rates. And it could be that demand is lower because mortgage rates are at the point juxtaposed against pricing that people are not able to afford that, which means that the demand is lower, but the demand is strong on the peninsula. And that is why these folks are able to pay, $4 million, $5 million, $10 million for properties, because there is simply demand for those homes at those prices. What we're seeing in the rest of Silicon Valley, where these homes are not quite so fabulous, the neighborhoods not quite so glamorous, still nice neighborhoods, we are seeing that sellers are still hanging on to their properties at really high asking prices, hoping that they will find a buyer who will be paying that $2.166 million median home price. Unfortunately, there just are not very many of those buyers, because most of those buyers in that price range, they are going to be getting mortgage financing. A lot of these $4 million, $6 million, $8, $10 million homes, they are bought largely for cash, and if they are getting a loan to buy it, typically a very small loan, those buyers are simply not impacted very much by mortgage rates, and it really all comes down to their ability to pay for a home versus somebody else's ability to pay for a home. So they can compete and pay that higher price, and somebody else not going to be able to get that property. Many of these homes which are selling for $1 million over list price are getting 10 offers, and many of these homes in normal parts of San Jose not getting 10 offers, maybe getting 1 offer, maybe getting 2 offers. At my office meeting this past week, it was an interesting time. They passed around microphones to agents who were sharing their experiences in the market in the past month. And agent after agent was describing how open house traffic was down, the number of offers that they were getting was down, the number of disclosure packages that they requested was down. Many agents were saying that they weren't getting any offers at all, and it's not a function of mortgage rates, because I'll tell you what, if all those houses were priced at $1, do you know what would happen? They would instantly, immediately get flooded with offers, and they would rapidly get the price bid up to the highest price the market would bear. Now in Atherton and Menlo Park and Palo Alto, Los Altos Hills, you don't need to price your home at $1 in order to get a stampede. All you need to do is price your home at $4 million, even if it is a fixer-upper, and you will get plenty of activity on that property. So just know that what's going on in the Silicon Valley real estate market is simply a function of supply and demand. In the high end, there is strong demand and limited supply, which is why Bloomberg is reporting that the market is hot and $4 million fixer-uppers are just flying off the shelf. But in the great middle of the market, and frankly the lower end of the market, there is just not that much demand for real estate given the prices that sellers are clinging to for their properties. But right now we have a situation where many sellers, they don't really need to sell. Selling is for them a luxury, right? It's something that they want to do. It's not something that they need to do. So they are able to hold onto their homes, keep that price high, and hopefully find a buyer who can pay that median $2.166 million. But fewer homes are selling in 2025 versus 2024. In fact, I believe it is only 700 single-family homes closed escrow in May of 2025. That is a shockingly low number, considering that the amount of inventory increased by 39% in May versus a year ago. So there's a lot more for buyers to choose from. There's a lot more homes that sellers have to compete against, but there just aren't very many sales going on. So if you are interested in getting your home sold this year in Silicon Valley, and you don't have a $4 million fixer-upper in a neighborhood where people would happily pay $5 or $6 million for that property, you're going to want to make sure that you understand the fundamental law of supply and demand, and that is what drives real estate prices everywhere. It's not mortgage rates. My advice to you is, if you want to get the highest price for your property and the best terms possible, set your price at a very aggressive point. I don't think you should price it at $1, although nothing wrong with that really, depending on your situation, but just price it aggressively, shockingly low, so that your home becomes the home that all buyers need to see first. That they want to get in and see it before they look at any other house. That they feel a sense of urgency where if they don't act on your property, they're going to miss out on a really great deal in a market which does not have a lot of really great deals, right? You want to be that it house, then just set your price at a point where you know you will get multiple offers, and then expect your realtor, that should be me, will be able to make those buyers fight against each other. I will be able to milk them one after the other to extract the very best combination of price and terms possible. So that is what is going on with the Silicon Valley real estate market. It is both hot and it is cold, and it all has to do with the balance of supply and demand in the market segment in which you are working to sell your house. All right, well, hey, that's all I have for this video. Thank you so very much for watching. I really do appreciate it. And if by any chance you did enjoy watching this video, I'm guessing, just a guess, that you might also enjoy some of these videos over here. These are some of the most popular videos here on my YouTube channel, so please do take a look. All right, that's all I have for this one. Thanks so very much for watching, and please stay tuned.